Hi guys. We're going to talk today about doing business in Quebec. I think certainly for people watching and listening in and sending questions in, quite a few questions on that. And also, I think fundamental is going to be a word we're going to hear a lot today. Well, I hope we are. In this environment, we should be. So Jose, why don't you introduce yourself to everyone first?
Yeah, so my name is Jose Vizquerra. I am President and CEO for OIII Mining, and really happy to be here in Quebec, a place that is very close to my heart, and a place where I feel extremely comfortable working. We have been working there for the past 6 years.
There we go. Right, I'm going to start with the fundamental thing. You and I have talked a lot over the past couple of years, and you've been banging the drum of, on a fundamentals basis, this is what people should be looking at. And now, in this current environment, in the economic mess we find ourselves in and this sort of uncertainty, it's risk off. People are taking their cash away from the equities market. They're having a look around and going, well, maybe not yet. But when they come back into the market, what type of thought process do you think they are going to be going through? Because it's very different from 2020. It's so easy then.
Well, if I understand their thought process, my stock will be $5. But I don't. I think what we can do as executives is to control what we can control. And there is a couple of things that we can control as executives. One is cash. Two is your team. And three, to grow in fundamental value in your assets. That's all what we can do. Really more than that, if the gold price goes up or down, we cannot control. If investors decide to come in or not.
But tell me through your story, because I think for investors who have perhaps not been through a cycle like this before, they're looking around going, wondering what on earth has just happened, and they're a little bit nervous and possibly thinking, well, do I go back and put my cash into mining when things return to normal? What story do you need to tell?
If I am an investor, certainly I would see at OIII stock where I can buy, where my downside is minimum and my upside is in the roof. Why I'm saying that is right now we have a company with a market cap of $140 million. We have $100 million that we have built. By the way, it's not that we have the cash on a raise, like we have been building that by shuffling and shifting and selling assets in exchange for shares. And then you have the upside of an extraordinary project such as Marvin that has a preliminary economic assessment already done with a net present value at a 5% discount rate, $1,450 per ounce, or $400 million, $423 million, which is already telling you that 140 minus $100 million in cash, it's 40. That means that the fundamental value is 10 times what we have right now, and that's not even including alpha. So yes, I look like a radio talking about fundamental value and keep talking about fundamental value, but that's the only thing we can control. And eventually the market will wake up and say, hey, hold on. And on top of that, these guys are 12 kilometers from Canadian Malartic, which there is already a mill and they will need feed. So I think it's written in the world. This is not a matter of if OIII will do well. Is when is OIII going to do well? And it could be in the next 5 months, could be in a year, could be in 2 years. But investors will eventually come into fundamental value, into fundamental companies that believe in the idea of wealth creation.
Right. There seems to be a new reality we find ourselves in. New reality in terms of cost. Every conversation is about inflation, supply chain, access to skilled staff, drill rigs, whatever it is that you need to get your hands on. I'm not sure the investors are there yet. What would you say to them? It's like,
well, a couple of things. Probably the first one is to say that we were maybe lucky, but we used on a preliminary economic assessment, again, $1,450 per ounce. Allow us to have a little bit of flexibility moving towards a pre-fees. So we could use, let's say, $1,600 per ounce, which will be, minimizing that delta with regards to inflation. I imagine that what investors will do is they are going to take my pre-fees and they're going to say, okay, 20% more just to make sure that inflation is being taken care. I want to believe that the team that we have and the groups that we have assembled to do the pre-fees would have all the cautiousness and being very efficient in the costing that we will have proper cost.
But that's due out, what, Q3?
First week of September, yes.
Right, okay. So you've got to get the balance right, because we've seen companies destroy their own market cap by putting out economic studies this year. Numbers were much higher than previous economic studies, made investors quite nervous. And you've got to give them, on the other hand, you've also got to get them excited about the potential of this thing. And getting that balance right in this climate, this new dawning reality, that's a hard act, isn't it?
It is. At the same time, we have to be honest, whatever we have, and investors need to know where they're investing. One thing that we are changing in our project is moving from a preliminary economic assessment where we were assuming a production profile of 116,000 ounces. We're moving to 150,000 ounces as a production profile, which is an important difference, because I think there is a mindset on investors where if you're not producing over 150,000 ounces, you don't get credit. We have seen that when we put our initial PEA, we didn't have any reaction. Hopefully with the pre-fees we will have. Certainly our capex will not be $250 million anymore, because that was for 116,000 ounces. Now it's going to be different. I don't have the numbers. John Felix, our VP operations, is still working on them, and hopefully they are going to be competitive enough to allow us to maintain at the very minimum our net present value.
Right, so you're going through the process of working on the numbers. You're very cognizant of what's going on out there. How easy is it for a good project to become a marginal project in an environment like this where gold price is not moving?
Well, I guess it's very easy to make it marginal. At the end, I think the most important thing is to do your costing the most conservative you can, to make sure that you're not going to be in trouble. And unfortunately, in our industry, we have seen already a couple of overruns in a couple of projects that are being built as we speak, and that doesn't help, because that does not create trust and confidence in that. Although as part of the team that I'm part of, they were able to do things on time and on budget. So I want to believe that maybe we have an operational, advantage, put it that way.
So again, so just on the cost side of things, it's like on time, on budget, always good, but getting harder and harder to do. What are the other sort of tools in the armory in an environment like this? I keep saying this, but it's such a dynamic, volatile environment that every day is different, it seems, right? So the challenges are very pronounced, and mining's tough enough. What are the tools that you've got available to you, whether it be to deliver the project on time and on budget, or distract the market with M&A, or whatever companies need to do to put themselves in a defensible position?
Well, again, I think the best way to defend yourself is making sure you have enough cash in the bank. That's the best way to defend yourself. With regards to the costing, you have to hire the best people in the market. And I think we do that, and we are very cognizant of that, and maybe lucky enough that we have great groups even in Val-d'Or where we operate. And we operate in a place where there is already four major companies in the region. We have El Dorado, we have Yamana, we have Agnico, three. I think I'm not seeing anyone. So they use the same guys. So the costing is different. I think that at the end, information is very important. And the fact that we have different mines in the region where we operate allow us to have better benchmarking than what other groups could use in areas where no mining or mining is a little bit more further apart. No?
Okay, and then sort of coming on to the kind of advantages of being a Quebec focused company. Again, we've talked in the past with you and other Quebec companies, the support you get from the province, financially and otherwise, which is always good. But I haven't seen you do too much of that yet. Is that coming down the line in terms of engaging with the province and getting some sort of?
No, we are totally engaged with the province. We are finishing our baseline studies in the next couple of weeks. It's very important because, everyone talks about, I already started my permitting process. How could you start your permitting process if you don't have baseline studies? That takes 2 years. We already did it. And in that process, we already had two meetings with the community, because remember, we have community, which is Val-d'Or and Malartic, and on top of that, First Nations. So we already had meetings with the communities. We already began the process of engaging them. Like when we have right now, for example, we're thinking about two ways where we can put a road. So we will show them the two options. We'll wait for them to say, we prefer this one. And I think that is a way to begin trust. And then with regards to the government, we have already started conversations with Minister of Mines, Minister of Economy, Minister of Forestry, Minister of Fishery. Am I missing anything? I think I'm not. So that's on the works. We have an extraordinary Vice President, Mirza Bello, who is taking care of all that and has been doing a great job.
Right, okay. I meant engaged, where's the money? Show me the money. At what point do they come forward with, I don't know, either an equity position, or you start understanding what the cost of capital could be to you? That's what I think one of the main advantages of being a Quebec-based company is.
I think there's two advantages. The first one is the possibility of flow-through, where the deltas are much higher than in other provinces. I mean, when we raise money, we raise at a 70% premium or 80% premium, different from Ontario or other jurisdictions, which is more like 30 or 40%. So that means that your dilution is way less. That's one. And two is the support from the different investments from Quebec. We do have the privilege of having CITICS and FTQ, a little bit of the Caisse Depot, and Investments Bank Quebec. Of course, we continuously talk with them. So, these four groups really allows to grow and allows the companies to move forward in a very accelerated way, in a sense. And it is, it is really important, because I think from a political standpoint of view, I think Quebec has realized that, the development of areas which are a little bit apart from the city really is in the hands of exploration and project development. And that's the reason why Quebec keeps growing. I mean, they get it. You need natural resources in order you want to distribute, you need to create.
Right. Okay, you used the word accelerated time frame, right? That's been a struggle for you, and it's frustration for you, I feel, in the past, when you've been talking about production in 2026, and it's 5 years out, and people are like, well, I can't deal with that. I can't wrap my head around that. There are more interesting things to look at, right?
Yeah.
Two things have happened. One, time moves on, and that end point is closer. Two, and it comes back to my initial question, which is, what would you say that investors should be doing when they do come back to the party? What type of companies? I'm imagining you're going to tell me it's look for companies with strong fundamentals, and you're laying out the case for your company, and there'll be lots of others that can do that too. So what does that actually mean? If you could break that down and say, we are a strong fundamental story.
So with regards to time, it is a privilege to work in Quebec, in the sense that we have been talking about 2026 for the past 2 years. And the reality is that now the clock is ticking, in the sense that if we assume that Canadian Malartic will be running out of ore by 2027, and they will need potentially more material, which could come potentially from OIII mining, from Marban, they will have to make a move in the next 18 months. With regards to time on what we can control, the good thing is that we know the time is the time, and it's not changing. If we were somewhere else in the world, they would be telling you a year, and could be 10 years from then, and you're not building the mine, and you're still waiting for permits, and you don't know what's going to happen. Here, you know what's going to happen. That's number one. And number two, with regards to fundamental value, we keep insisting in the same thing. I mean, there is a cash already there, which could be re-rated by our investments in these other companies that could have success as well. On top of having Marban with an NPV of $423 million, on top of having Alpha. And not less important, yes, we do have measured and indicated 2.4 million ounces, but yet Marban has the opportunity to have 5 million ounces as we continue to drill along strike, as we continue to explore, as we continue to show potential. And very important to mention, can Marban show 5 million ounces sort of in a short period of time? Yes. But that would mean that we'll have to drill below 400 meters. Then from the capital allocation standpoint of view, it doesn't make much sense in the sense that those ounces are going to be after year 10. So yes, I'm going to show more ounces, but it's not going to impact my NPV. So that's why we have decided to drill in areas where we could have ore come in from closer to surface and really impact the NPV. So we will see that transition from pre-feas to feas. Right now, we're going to work on the pre-feas, on the pre-feasibility study with what we have, which will be the foundation. People don't believe in PEAs. You know that. People, you say, here's a PEA, it's like, yeah, I don't believe that. But people do believe in pre-feas. I want to believe. So once we have a pre-feas, I think the valuation part of it will decorate better where we are. We'll really show where we are.
Okay. There's a big audience here watching. Well, I hope they are. Who've moved in from the sort of tech space, don't understand what you're talking about, don't understand the vocabulary, the terminology, or even what it means. In simple terms, what is it? You've got 25 million in cash, got 80 million in securities. You're going to produce how many ounces a year?
150,000.
150,000 ounces. What kind of margins is indicated at the moment?
So we have all-in cost of $822.
Right, it's a big margin, and throwing off a lot of cash, and a big region to develop. I think that's the simple message for a lot of people watching this. Well, look, I think it's one of my favorite Quebec stories. So appreciate your time today.
Thank you very much.
Enjoy the rest of the conference.
Thank you for your time.
Thanks.
Appreciate it. Thank you for attending.